I mean, even just think about small things, which we advocate, like keeping clients invested. Think about the cost of the client that is doing it alone, or maybe doesn't have a great connection with their advisor, and the pandemic hits and they sell out only to have missed what's happened since then. I mean, the portfolio alpha that was generated just in that last year, or GFC, things of these nature, these periods of market stress, is just really invaluable for both client and for advisors. So keeping them invested in those periods can be extremely valuable. So I think that's really the message. And
welcome to AFO Wealth Management Forward, a podcast about finance, accounting, technology, and entrepreneurship. We apply our decades worth of experience and insight into what makes businesses work, so we can help others grow both personally and professionally. In this ever-evolving marketplace, we help accounting firms and financial advisors grow their practice through the adoption of holistic wealth management services. Learn from industry leaders and subject matter experts to unlock the secrets of their success. A podcast that shows people and companies the transformative power of technology so they don't fear it, but instead harness it. Don't fight the robots, team up with them. And here are your hosts, Rory Henry, Director of Business Development, and CEO Rob Santos of Arrowroot Family Office.
Welcome to the second part of our interview with Josh Hirt. We've received great feedback from our part one interview, so you may want to go back and listen if you missed it. Once again, I'm joined by Diane Young, who is a managing director here at Arrowroot Family Office, and Josh Hirt, a CFA and lead economist with the investment management group at Vanguard. Josh is an experienced researcher in the field, and he focuses on understanding growth within the U.S. economy for Vanguard. In this episode, we talk about holistic approach to advisory, economy concerns like inflation, data transparency, cryptocurrency, implications on the housing market, ESG investing, and more. So without further ado, here's part two of our interview with Vanguard economist Josh Hirt.
If we see some of the effects that we are expecting with the reopening really centered around the second and third quarter of this year, their alternative would be to just be able to not meet demand, and there would just be a lot of capacity constraints likely. So it may be that that's a better way to achieve the bottom line anyway. And I would say that that's more of a near-term story. I think as we get out into 2022 and beyond, it's not clear how that will affect earnings. It may be that jobs, as what has typically happened in the past, is that that certainly has changed job profiles, and some jobs are eliminated in those ways if they're just if it's not profitable to maintain that type of a position at a pay rate. You transform that position into something that is maybe a higher level skill, that more justifies those wages. And so, net, it probably is better even for those folks who may have had those positions in the past, where, you have, some higher level skill sets that are developed through this. So I think those are some long-term stories, but near term, it very well may be that this is something that needs to happen in terms of, enticing workers back online.
Great. It makes total sense. And kind of shifting topics here, Josh, we have a program, AFO Wealth Management Forward, that teaches accounting firms how to implement holistic wealth management services. Can you touch on how advisors are moving toward a holistic approach, and maybe, what you guys are doing with your Vanguard Advisors Alpha Program?
Yeah, sure. So, I mean, this has been a really big component of work that we've, has been instrumental in our group for probably a decade now. And I think it really stems from the concept of that, listen, you can, as an advisor, you can affect your clients' investment outcomes much better by approaching it from a more holistic, degree, so, rather than perhaps just being a stock picker, and I would say there's really two, pretty strong components of that. One is that, think about building more diversified portfolios, things that allow clients to maybe stick through different periods of time. One of the things that's been great about, just the cost advantages, as we've seen, have really come down in investing in general. So building very diversified, efficient, low-cost portfolios is very doable. And we found, through our research that being able to do that by, matching an investor's risk profile is something that really can benefit them if they're able to stick with that. And then the other component of that is for the advisor themselves in terms of being not just a stock picker or an investment chooser, providing things like some of the softer skills like behavioral coaching, helping people stick with their plans or figure out maybe when they need to adjust their plans, can be every bit as beneficial to both that individual, but also that the advisor's practice. In terms of growing assets longer term, you want to see clients be invested in something that's appropriate for them and that they can stick with. And it just may be that during periods of stress in the market, or maybe some type of a life event, that you're being there as an advisor can provide significantly more alpha by making, considering the whole portfolio, considering an investor's lifestyle and choices, that can really be a tremendous benefit for them. Even just think about small things, which we advocate, like keeping clients invested. Think about the cost of the client that is doing it alone, or maybe doesn't have a great connection with their advisor, and the pandemic hits and they sell out only to have missed what's happened since then. The portfolio alpha that was generated just in that last year, or GFC, things of these nature, these periods of market stress, is just really invaluable for both client and for advisors. So keeping them invested in those periods can be extremely valuable. So I think that's really the message. And there's a number of areas of Advisors Alpha that we advocate that advisors can help their clients. So it's really great work. But that's the crux of it, is that they can really be more holistic.
I always tell my clients that my number one job is walking you off the ledge, keeping you from jumping.
That's right. Yes.
So, with the new administration, there's a new direction going on. There's new taxes on the horizon and new potential regulations. How do you feel that this is going to impact what advisors are facing?
Yeah, I think this is a excellent point about, really what we just talked about, with that advisor being that voice that they can really steer a client into what's best, given big changes. And it may just be that there aren't changes to be made, but just having that advice to, if someone trusted that can kind of take you in that direction. I think that there are, as you get, bigger changes, I think the tax implications are probably the biggest one that come to mind for me. Because for certain clients, it's going to impact them very differently. It may not impact them at all. It may impact them substantially, and so I think thinking about a strategy around that is really going to be important, or even just knowing that your strategy is good and you just need to stick with it, I think is a really helpful way that an advisor can help clients, given those changes, because there's still a lot to discover about them. I think our inclination is to say, well, you've got to do something. I've got to sell, I've got to buy, I've got to reposition, to take advantage of this. It may be that that's not the best case situation, given this. So I think a lot of that has to play out. But I think that really speaks well to what we've been talking about. Yeah.
Yeah, and I've had a lot of clients, they'll call and they'll read something in the on the news or whatever, and they're panicking. And I said, that's just some reporter writing something, because again, it's stories are, dog bites man isn't much of a story.
That's right.
So I always caution people, let's wait until we actually have some legislation that's being voted on before you do anything, because it's ridiculous.
Right.
Right now, everything's out there in the sun. So we'll see what happens.
That's right. Agreed.
Great. And you've been doing this for a while here, Josh. How have you seen the technological developments within the industry help advisors, elevate their practice, talk about digital advancements and how they can better, provide services to their clients?
Yeah, I think clearly those ones are key as well. I think also one of the more overlooked one is just, if we think about, 10 or 20 years ago, how technological costs of have really brought down the cost of investing. I would put things like being able to engage now and invest with ETFs, as well as one of those technological advancements that have really benefited clients. I think that's something that gets missed a lot, is just how effectively the average investor can have a very well-constructed, very cost-efficient portfolio. And that doesn't have to be the average investor. Very wealthy, very sophisticated investors also use these products, as we know with all of our work, with institutions and different groups, as well. So I think that's something that really benefits clients in general. And it also helps, kind of going back to what we were talking about around building diversified portfolios and being able to really use that to a client's advantage. I think that helps the practice in general. So that's a big one, certainly. And I think that'll only continue to be something that benefits clients. But also to your point, even just, even more near term, some of the technology, I think it helps broaden the scale of advice and sort of how we deliver advice. You certainly have always had sort of the in-office approach, or the over-the-phone approach that, has really been around for a very long time. That works tremendously well. That works, and will continue to work for a very long time. I don't see anything around, removing that human connection and that face-to-face connection at all. I think that can just be so important, especially as we're talking about building these practices with trust. But it also opens the door for people who might be fine with other avenues of advice, or even minimal advice. If you think about things like robo advice, or just building a portfolio that is constructed well, diversified, meets their risk tolerance. And some clients would say, I'm good with that. That's enough for me. That's a form of advice. Things like some of the mobile and the digital, conversations that you can have. I think that it makes it more, approachable for some people that may have been missed by that. Because ultimately, I think what you want to have this group that, well-intentioned group of advisors that is providing this type of advice to clients is just so valuable. So to the extent that it can now meet people in different spots, I think is really great.
Yeah, you talk about diversified portfolios. I have to ask about what's going on with cryptocurrencies, specifically Bitcoin. What do you see as the future of cryptocurrencies? How is that going to affect the markets? What's your outlook in regards to that?
Yeah, I think our view on that is still, in some respects, still hazy. It's not at a place where we would recommend it in client portfolios at this point. Our view sort of fundamentally on it is that it's still very difficult. It's more commodity-like than it is in some ways investment-like. It's very difficult to assign sort of a fundamental value to it. To say that the price will go up or the price will be zero. Very difficult to judge that on a fundamental basis, because there's limited, sort of channels of, even a fundamental analysis on that. So it's very much supply demand driven in terms of, almost sentiment. So it's something that we wouldn't say fits in a client's portfolio as recommended advice. But that said, there's a lot of positives with it. I think it's going to be around. I think we're going to only see the adoption of it and different forms of that grow. We know that central banks around the world are looking very closely and have been involved in developing cryptocurrencies. So I think cryptocurrency and maybe even the sort of the decentralized versions of currencies or finance in general, that's another movement I would kind of put along with this, is the decentralized finance. I think there's a lot of things there that are just in the infancy stages and very unlikely, I think, to disappear. So I think there's a lot of things there that we'll continue to be hearing about and seeing and become more mainstream.
I think the blockchain technology that's the undergirding of all this is what is the most exciting thing in all of that.
That's right. Yeah, I mean, we've leveraged it at Vanguard in terms of lowering some of our costs in terms of in some of the data that we use. We're able to really pull some of that the blockchain technology and actually harness it. We've done some work with that in our portfolio management teams, and I think that's just a super small example. Agreed. Some of the the decentralized ledgers and some of the transparency that provides is extremely interesting.
And I'm still trying to learn a lot about it, but it's it is exciting, and As I get older, you try not to become like the old person that's like, oh, don't use that telephone. I remember as a kid, my mom like, get off the telephone. It's like.
I was get off AOL was mine.
Yeah.
So every generation gets yelled at about whatever new technology is coming down by their parents and that. So what holistic tools do you see advisors using to provide better service and that to their clients?
Yeah, I think I think some of the things I've mentioned are really key. I think that again, from the technology side, as we mentioned, things like I even didn't even mention things like target retirement funds, things like that really give clients a default option that is fantastic in terms of wealth creation. Things like that I think would qualify very well. For your client that really doesn't want to be involved and really doesn't want to have a lot of sort of transactional based movements in their portfolio. I think things like that are excellent. If you think about like the wealth coaching and that holistic approach, different technological approaches, being able to communicate over Zoom, maybe perhaps more frequently than they would have engaging in the office, maybe something that is very helpful to them. I think those are two, I think, examples that could be really effective, in addition to the other things I think we've talked about, the costs, the transparency, data is so transparent now. It's really, available for clients to see for themselves. It's available for advisors to be able to show clients, so I think that's a component of it as well. The other part of it isn't so much a technology, but I would say that, with transparency and data, transparency in a lot of these areas, I would say that there's a lot of really great research that is now available to people that wasn't previously. Think about a lot of the groups that you commonly think of out there. Certainly that's what our group does as well. But really trying to provide clients with perspective, and I think that the clients have the opportunity to see a lot of different perspectives. They could see Vanguards, they could see others, they can see some from the street. So I think that there's a lot of really good transparency that's come out that'll help clients, with some of those decisions too.
Yeah, speaking about education and transparency here, we always talk about the great wealth transfer. The baby boomers transferring of wealth to the younger generations. Some people call it the silver tsunami. Josh, can you kind of talk about that shift that's going to happen, especially what the younger generation's going to be coming into?
Yeah, I think that there's a huge opportunity, and there's also just a tremendous amount of still uncertainty with what that shifting demographic is going to mean. It's going to affect, as the baby boomer generation did, those huge demographic changes have major implications for the economy, preferences, types of businesses that emerge. And so I think we're really just starting to see some of those things right now. But clearly, I would say things like, the adoption of Robo Advisors or different types of advice. I think I've only seen those grow. They've certainly been something that has grown very much and very rapidly at Vanguard. I think you have to believe that's a component of it. They're more comfortable, perhaps doing things online where it doesn't need to be face-to-face, and they're comfortable seeing that. I think that's a really key component, at least for the investment space. And then for the economy at large, I think, different preferences are shaping some of the things that we see out there. I think it's going to drive housing. That's a very unopened or unanswered question that we still have, especially coming out of the pandemic. What kind of housing preferences and location preferences will a younger cohort choose? Will it be something that they'll be still, as maybe past generations migrate to big cities where there's larger clusters of, high quality jobs? Was that something that will necessarily continue? Or will some of these remote opportunities open that boundary a little bit further and maybe change how people are thinking about where they want to live? I think that's a really key one in terms of something that drives the economy.
Too, and I think one of the things in the infrastructure bill that I'm the most excited about is kind of the rural Wi-Fiing of the rural areas, because there's so many places that I couldn't move to this a farm up north or something like that because they don't have internet access.
That's right. That's some of the, I think some of the really encouraging things that are in the infrastructure bill are some of um, those aspects. So I think that those are really key. I even think it's shaping preferences in terms of investment products. I mean, the first thing that comes to mind is like your ESG push, things of that nature, and just the adoption and the seemed preference for investments that have those characteristics. I think those are things that are also clearly happening right now already, and probably will likely extend as this. We're really just, I think, entering the probably the first quarter of that cohort of age, now moving into more formal household formation years and family stages. So I think we're really just beginning.
And piggybacking off your comment about like the Robo Advisor, and I know for the advisors who are watching this podcast, they might think, well, if there's a Robo Advisor, what do they need me for? And that's not the way you should be looking at it. You should be looking at that's a tool in the advisor's toolkit that frees you up to spend more time doing those.
We always say, Josh, don't fight the robots, team up with them.
That's right. I couldn't agree more. I mean, that's exactly. I mean, whether they would admit it or not, I mean, a lot of firms already use and have used for a very long time some type of financial planning software or portfolio management tools that are effectively now have just been created for the masses, where you don't need that. And so I think that you can continue to use that as a tool. And I think that's actually at one of the cruxes of our work from Advisors Alpha, is that is no longer the differentiator. These types of tools are really available, and they're going to be available to everybody, whether they have an advisor or not. And so your job as an advisor is to bring some of those things that they can't, and I think that's where a lot of the work on behavioral coaching comes up, is that's something that a robot, really won't be able to provide. And so that's an area that can be really beneficial, super high margin for advisors.
Right. I think that's a great point for us to wrap things up, Josh. There's promise out there. You just got to team up with the robots, utilize them, and provide the best service you can.
That's right.
Great. Thank you for joining us, Josh. I mean, we covered a number of different topics: the economy, remote work, the bond market, blockchain infrastructure. We really appreciate you coming on, and it was very informative, and we hope to have you back on again in the future.
Yeah, you bet. Very happy to be here, and thank you for the opportunity.
All right. Thank you.
All opinions expressed by Rob Santos and Rory Henry on this website podcast interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office, LLC, or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.